Hello and welcome to BQ Prime. A very good morning to all the viewers. You're watching Trade Talk. I am Hiral. Clearly, if you see in terms of the markets, a 75-point range is what Nifty traded in yesterday's session. Now, this is the same range that will actually decide in what direction the index will move as well. Because clearly, if you see in terms of the June FNO series, that is coming to an end. And technically, it just has two trading sessions that are left. So a lot of volatility that can be expected. But clearly, there has been consolidation in that 18,650 to 18,720 kind of a zone. What is interesting that is happening is the wicks that has been falling along with the stocks, and that's a very unusual trend that we witness usually in the markets. Clearly, if you see in terms of the upward journey that everyone is anticipating, before that near-term consolidation is what is expected to continue. Let's quickly look at few of the technical levels we should be watching out for. Nifty has been taking support at the 20 DMA, and this is for a second consecutive session. If you see 18,651, that has been the key support levels in terms of Nifty 50. If it breaks below these levels, then the next one that we are watching out for is 18,611. Moving on, if there is an upside, then the key resistance is 18,727, which is then followed by a 18,762. So these are few of the technical levels we are watching out for, but clearly a range bound trade is something that is on the cards. In terms of Bank Nifty as well, the support is coming in at around 43,531, but there is clear resistance now at 43,762 and 43,883. The 44,000 level in terms of the psychological mark that we've been watching out for Bank Nifty has been some points away now. So clearly that's going to be a distant one to look at. If you see from an FNO data perspective as well, clearly the highest put OI is seen at around 18,700, whereas the highest call OI is seen at around 18,800. And the Nifty PCR, that has increased slightly from 0.93 to 0.95. And the OI addition that we are seeing in terms of the futures, that's clearly indicating a buildup of long positions. Now, what is interesting to watch out for from an FI perspective is that the FIs are still holding some long positions as in comparison to the short positions. So there is a possibility that we could see selling pressure once the FIs actually start unwinding their positions as well. So that is clearly giving you an indication that yes, consolidation, buy on dips, sell on rally, that's the overall mood that we're looking at right now. But the underlying tone still has that positivity maintained. So lots to watch out for in terms of from a market action perspective. But apart from that, a lot of stocks that will be in focus in today's session. And Rishi joins us with more to give us details. Rishi, a plethora of stocks that you're watching out for, few from the insurance space as well. What are the key, which are the ones that you're looking at?
So the first one, as you mentioned, in the insurance sector, there's ICICI Prudential, which got a cause come demand notice from the Directorate General of GST Intelligence, and this was for 492 crore worth. So this is part of an industry-wide issue of input tax credit. So in fact, HDFC Life also got a similar demand come cause notice from the same Directorate General of GST Intelligence, and ICICI has deposited 190 crores of that, but it hasn't accepted any liability as of yet. Now, then there's also Sapphire Foods that's also in the news. One of its owners, which is basically not owners as such, it was WWD Ruby, which owns about 3 million shares. It has about 4.7% stake in Sapphire Foods, and it has and those shares are offered up for a price of 1,345 and 1,300 to 1,391, and this is a discount of around 0 to 3.3% as compared to yesterday's closing. Now, there's also Aditya Birla Capital, who is also planning to have a QIP of 1,250 crores. And there's also Hindustan Aeronautics, which will have a board meeting today in order to decide for a stock split.
So So in terms of Hindustan Aeronautics as well, Rishi, clearly, the stock has run up a lot, right? What is the performance telling you? Is that one of the major reasons for the split? Because that's what is the trend usually. And the stock has been in focus, right?
Yes, absolutely. So, as you said, the stock has rallied, has almost doubled over the past 52 weeks, and it has grown over 45% this year. And it has been recently in the news with respect to its deal with General Electric as well. Now, there's also the SAT hearing with regards to the promoters of Z Entertainment. So, the plea that was held yesterday by the SAT, it was adjourned to today. And the SEBI also argued that its decision was not prejudiced as such. It was more to protect the investors and stakeholders. There's also HUL. There's a new MD and CEO who's going to be taking over from Sanjeev Mehta. So that's going to be Rohit Java, who's going to be taking over today. He's also the president of Unilever South Asia, and earlier he was also the chairman of Unilever Philippines as well as Unilever China.
Right. Thank you, Rishi. In fact, in terms of HUL as well, the clear strategy that they've been saying that they're looking at now is also to start pushing volumes and focus on value accretive acquisitions as well. So probably this is something, a fresh mind that will be coming in, will be able to actually bolt their, strategy as well. Thank you for getting us this detail. So these are few of the counters we will be watching out for in trade today. But apart from that, a lot of brokerage reports have come in. Firstly, let's look at a Pyramid Enterprises. As we know, it has been in focus after it sold stake in Shriram. Now, Jeffries is a buy, and they have raised the target price to 1,025. And what they've interacted with the management as well, and their interactions are suggesting that the provisions are expected to stabilize from here on, as the stress in wholesale is something that has been recognized so far. In terms of where the retail book goes, the growth is looking strong, and it should drive almost a 15% loan CAGR over FY23 to 26. They're expecting some recovery to come in terms of the profitability as well. And though it will be a gradual phase because the OPEX is absolutely, elevated. And the stake sale in Shriram Housing is something which is slightly positive, and it could actually help lift the earnings as well. So we will be watching out for a Piramal Enterprises in trade. Apart from that, Amber Enterprises is also something where Jeffries has a buy for a target price of 3,070. What they are saying is that the channel checks, are indicating that the demand with regards to the month of April and May have been weak, and this is on the back of the unseasonal rains. In fact, a lot of other brokerage reports are also indicating a similar trend, specifically from a consumer durable perspective. Now, they're expecting an impact on Amber to the tune of almost around, impact on Amber, and they've cut their EPS on the back of which by 3 to 4%. They're expecting a decline in RAC sales mix to almost 43% in FY23, and that's something which has helped de-risk the business for Amber as well. And they're expecting Amber to receive PLI benefits in FY24, and that is something which would likely be retained. So clearly, you have Amber, and along with that, a lot of other companies in the consumer durable space that will continue to remain in focus, taking into consideration that the channel checks have indicated some bit of a slowdown in the months of April to May. So the likes of a Bajaj Electricals, Symphony, Whirlpool, these are a few of the counters that could see some bit of pressure. But moving on, a couple of weeks ago, we were already seeing aviation counters which were flying high. The kind of deals that we've seen on the back of the Paris Air Show as well. Again, you have an Indigo that comes back to the limelight in today's session. Sajid joins us with more. Sajid, good morning.
Good morning.
Indigo is in focus. I mean, UBS is absolutely optimistic.
That's right. UBS is very optimistic about the airline InterGlobe, and they have upgraded the price target as well. The main reason for that price upgrade is primarily higher yields due to strong demand, and which would lead to also higher passenger load factor. They're also looking at lower fuel costs, which have fallen, especially aviation turbine fuel prices have fallen, and that's going to help improve margins for them also. The yields are already 30 to 40% above the pre-COVID levels, so they're seeing they're basically expecting a good Q1 profitability coming in from InterGlobe. They actually actually UBS has gone ahead and said that the Q1 EPS is going to be more than FY18 EPS, and that's something they're betting on, and that's the reason they while maintaining buy, they have increased the price target to 3,300 from 2,690.
Right. So that's with regards to Indigo. So that's going to be a stock we should be watching out for in today's session. But apart from that, there is something, in terms of what SEBI has introduced in terms of ASPA, like facility, and this is with regards to, trading in the secondary market. And this will be basically with regards to UPI block facility, right?
That's right.
What would this actually mean for the markets overall and for the investors?
So it's an ongoing transition which is happening from a technology point of view. Now we have already moved into a T+1 settlement mode, and as a result of which, subsequently what SEBI is trying to do is that it had introduced ASBA through UPI platform in the IPO market or the primary market a few years ago, and that's been running quite successfully. Now they're extending it to the secondary market, especially to the cash market from Jan 1st 2024. What it will do is that it will allow brokers and clients, they have it's an optional thing, but as of now it will allow clients to block their money in their own bank account rather than transferring it to the broker's account, and through UPI it could be either the margins can be debited, or the money can be transferred based on the trades which they have done. It's going to be a very it's going to reduce the default risk which is going to happen, because the clearing corporations will directly go and pick the money from the client accounts instead of looking at from brokers. But also from a broker's point of view, the cash flows which used to come into their pool account or the accounts from the clients are going to stop. So brokers will only provide the services. The cash will or the payments are going to happen directly through the client's bank account, and that's something which would be watched out for very carefully, because though it's optional from Jan 1st, this facility will be offered or may become mandatory going forward, and this clearing corporation have the ability to offer this to other segments of the market, including futures and options going forward.
Right. So clearly, this is in a way protecting the investor funds as well with this kind of a move.
It's primarily meant for that, and you're using technology for that. So you're using already an UPI platform which is there available for IPO. Because today if you're applying for an IPO, your funds are blocked in your account till you get the allotment, and if you don't get the allotment, the funds are unblocked. If you get the allotment, the amount required or the specific amount required gets debited from your account. So that's
it's
exactly
an extension of a facility.
It's
that
an extension
doing
of facility secondary market, but it's going to happen on a daily basis. So clients will have to put in their limits, how much of the funds can be blocked, or depending upon the trade, they have to put their daily limits for margins as well.
Right, but some measures coming in from the SEBI as well. But moving on, the primary markets are back in action, Sajid. The kind of quiet, the silence that we'd seen over the last couple of months, it's again back in form. Idea Forge, what is the subscription number looking like? Number 1 and 2. Sign DLM also opens today.
That's right. To start with, Idea Forge, drone company. Day one, we have seen roughly subscription of 3.7 times of overall book. If you look at what's happening at the segment wise, 5 times NI, which is a non-institutional HNI portion. Retail is already 12 times. QIBs haven't come in yet, but they are expected to, and it's one of the type drone companies. So what's interesting is that yesterday we were speaking to the Drone Federation. This is the first time a drone company is getting listed, and the street would be looking to value such a company, and on what basis they're going to value it is something very interesting, because there are a couple of more drone companies which are in the pipeline to come out with an IPO, and that would set the benchmark for them. So Idea Forge is going to be one of the things. The second is Seant DLM. They're also into a very niche area which is into PCBs and boxes which are used in various industries, very like aerospace, defense, industrials. It's also an interesting one, interesting take which is there. The IPO is opening on today and closes on June 30th, which is on Friday. Price between 250 to 265. It's a fresh issue. There's a fresh issue of 592 crores, which is going to be used for incremental working capital because they require a lot of working capital. They have already 300 days of working capital, which needs to be reduced to 200. That's what the management said when we spoke to them. And there's a capex of nearly 44 crores and some borrowings which will be paid off to the tune of nearly 61 crores.
Yeah, so that's going to be an interesting one to watch out for as well. So clearly, good buzz coming in terms of the primary markets, good buzz in the secondary markets as well. In terms of stock-specific action, Sajid, that we are going to see. In fact, one more stock that I just want to mention is a Paytm, because you have Macquarie, which has gone ahead and downgraded the stock to a neutral from a outperform. And what they are saying, Sajid, is that they are seeing competition and regulatory risks for the company. And financial, which still holds about 25% stake, could be looking to pare down its stake, which could cause an overhang. That's what Macquarie is indicating. And second interesting point is where they're seeing competition coming in from a Reliance Geo as well, from with regards to Geo Financial Services. And these two are the major reasons why they've actually gone ahead and downgraded the counter.
That's true. If you look at Paytm's guidance as such, they've been talking about profitability by September, and that's what they promised the investors. Macquarie has been the most cautious since day one of the listing, while they came out with an upgrade also in between, and increase the price target. But they think the price, now it's the competition is heating up because Geo Financial is going to be listed soon, and that's going to bring in more, more competition for them, especially from a lending side and this and financial stake which we have been talking about. There is they may be pairing their stake, and that overhang will always be there on the stock till the time they don't fully exit.
Yeah.
So that's going to be something.
And 25% is a good number. And how much they look to exit?
Yeah, means, even if they exit at this price, it's going to be at a loss to what they have already invested in the company. But it needs to be seen at what price they're going to exit.
Absolutely. So it's going to be an interesting wait and watch. But clearly, if you see in terms of markets as well, what SGX Nifty is also indicating is a pretty muted start. As we've been mentioning, consolidation is on the cards. Range bound trade is what is on the cards. That it's going to be interesting to see that 75-point band will help us decide on what side of the markets or on what side of the axis we actually move for. But we'll get you lots more during the day on BQ Prime. That's a wrap on Trade Talks.